with the markets. And while today has been a little more positive than Friday's sell-off was, we are still more than 100 points down. Our futures this morning, all of this the result of the Brexit vote last Thursday, that referendum. In fact, Friday, David, you just pointed this out, Friday was the toughest day on markets ever around the world. Joining us to talk a little bit more about the personal fallout is Matthew Peck of SHP Financial. Good to have you with us.
Morning, Matthew.
Good morning, everyone. Thank you so much for having me.
You bet. So let's talk about, first off, what are you anticipating, over the next couple of days? Will we continue to see this fall in the markets?
Absolutely. The word of the day is uncertainty. When this vote passed, the political climate over in Europe about who will be the new prime minister, when will the negotiations happen? Because technically, they do have 2 years to exit the European Union, but they're not sure when that 2-year process will begin. So if you have all of these question marks, if there's one thing that the market does not like, it is question marks and it is uncertainty. So we anticipate this will continue for the next couple of weeks.
And do you think that we'll continue to see that in our markets? I mean, I know that we'll have some maybe instability, but we're at right now, we got 133 points down in the Dow. It doesn't look good today, certainly. Will this be ongoing, and what should people do?
It's a great question. I mean, with the fall on Friday and then what the futures are looking like now, a lot of this is being priced into the market. I mean, the idea that the Dow might be cresting or going below, 17,000 is a large drop from where we are or were. Now, in regards to going forward, a lot of it depends on where people are in their own personal finance. So first and foremost, everyone has to make sure they know where they are. In other words, they need to know what their plan is. So first and foremost, everyone must have a plan. Secondly, if you are younger or you have some cash on hand, it is a wonderful buying opportunity. For example, global financial stocks have been really decimated with this particular fall, and so some of them are actually trading near and around book value. So if you are in a position to get cash at work, it's not a bad buying opportunity, whereas for most folks it's more of a kind of a grin and bear it, and we will get through it. Our economy is okay as of this point in time, but a lot of it depends, again, on where you are and just to make sure you do have a plan so you know where you are.
So, Matthew, I have a question, actually kind of a two-part question for you. What can people look for in terms of a bottom point, signal for a bottom point, and then what can they look for in terms of this is going to be okay and things are going to start swinging back upwards?
Well, in regards to the bottom point, it's always very difficult to predict exactly when that is. As sort of my position when I analyze it is looking at serious issues in the market that will predict a recession. So, for example, we're looking at things like layoffs or people unable to pay their debts. Mm-hmm. And so far, that's not happening in the domestic economy. Mm-hmm. And so with all of the turmoil that's happening in Europe, I mean, a lot of this is knee-jerk reaction, and the markets certainly have a tendency to overreact. So the idea of it getting down to 16.5, in and around there, if anything, that's kind of what I'm personally seeing. And then sort of a rebound will come in. But a lot of the market or the uncertainty has been priced in over the past, specifically Friday, as you were mentioning, literally one of the worst days ever on the market. Today will continue, but we kind of see, in my opinion, we'll sort of see a whipsaw back and forth, in and around this level, a little bit above. But until we get some bigger news and better news, we don't really expect a huge gain anytime soon.
So, Matthew, could we look at this really as a correction, sort of because we had gotten up where, right at 18? Can we look at this, try to spin this positive, and this is just that market correction that happens to be attached to a geopolitical event?
You could absolutely see it in that prism. I mean, we were, even prior to this, we were referring to this past year as a bunny market. in the sense that people hear about the bear market and a bull market. This past 6 months has been much more of a bunny market, where it's just sort of been hopping up, then hopping down, then hopping up, then hopping down, and sort of lurching back and forth, because we're at the end of a 7-year of a bull market, so we don't really see it much more places for it to go. Sure. After 7 years up, it's tough to sustain that. So it's almost like a big, large exhale, and then the minute that you have a significant, because it truly is a significant political event, we don't know the economic fallout as of right now, but any type of large, and again, a seismic event like that will give enough reason for there to be a major sell-off and to be that correction.
Sure.
I mentioned to Kim, Matthew, that we've been through so many of these volatile moments in the stock market over the last 5 years or so. I'm wondering if people are more accustomed to it and kind of, toughened to it psychologically, and is that actually a good thing?
I think so. I mean, it truly is whether it is the amount of activity in the market and the volume, and I do think that people have been desensitized a little bit too, where a movement of 100 points used to sort of raise flags and raise eyebrows. But a movement of 100 points nowadays is more like, oh, okay, that's almost standard for the current behavior of the market. So one thing hasn't changed throughout all of this, which is the market should be used for most folks as a long-term investment. I mean, unless they do want to spend all of their days staring at a computer screen, buying and selling on a daily basis, you should not necessarily tune it out, because you should be aware of it and you should be making sure that your portfolio is well balanced. But at the same time, a lot of this, when you look at through the prism of history, it will, volatility through more time gets sort of averaged out. Mm-hmm. So you do got to you must make sure that you do have time in the market, and as I mentioned before, that you do have a plan and know where you are and know where you stand.
Sure. Matthew Peck, SHP Financial, thank you very much for your insight.
Thank you, Matthew.
Absolutely. Thank you both.
You bet.